Welcome, market aficionados. Chaiking Money Flow. It does not display a stack of banknotes, but as the name describes, it's a wonderful proxy for flow of funds into and out of an issue. It is great expression behind energy in the price movement, fantastic visualization how strong or how weak is a chart. Combination of two of three basic variables, price and volume. The third is time, but I won't look at cycles in this video, although it would be pretty interesting to do an analysis on this particular indicator. It's one of widely used indicators, while at the same time often not well understood and definitely not used to its full potential. And when talking about understanding of an indicator, before you study or review any indicator, I strongly recommend to look at the formula and the reasoning, so you have the grasp what it really shows. I picked the chart of digital turbine because represents perfectly what I want to show. You have the basic base, and you have three waves up, or impulse waves, if you will. But if you go to the indicator, yes, you can find some trends from the tops or from the bottoms, but it's not exactly as you would like to see it. It's just arbitrary after the fact. You can draw different lines in different spectrum. The line of indicator crossing zero is pretty confusing. The price keeps going down and the indicators that jump up and down. The price is going up and the indicator, it's slowing and whatever, but it's not ideal. So the default parameter is not that great, and I discuss parameters in another video. I will post a link below. So what you can do? You can do number of settings on the indicator from 20, 50, 100, 200 days. And you may find out that it's breaking in relatively same time or close to it. But visually, it's very confusing. It won't give you the better idea how to proceed with the action. What I do, I use my standard indicator, 144 days, dozen of dozens, and it shows when the zero line is crossed. Although you have that situation here where you have a cross of zero line and failure. This is not a typical, this is typical chart for a nice setting when the price going up, but the different charts look differently, and it won't help you in many situations if you use just one indicator. So what you do, you may use two indicators, the fast 144 and slow 432 days. That's what I do. That's my parameters. And you have a better idea. Basically, the slow indicators is breaking the downtrend. The fast is loading up. Then the slow indicator continue above the zero line. You have the breaks on zero line on the fast indicator. But for pragmatic reason and for your visual acuity, the best way is to combine them together, overlap, overlay, and create just one indicator out of two. This is not a new idea, but in this setting and for this particular indicator, I am not aware that anybody else is using beside me. So if you copy, please give credit to that chartist. In the next instance, the fast moving indicators is moving about zero line, and the slow indicator is a bit late but moving too. So you can treat that as an initial loading of funds into the issue. And what's happened next, it's a correction. In the correction, the slow indicators stay up and the fast indicator is down. That's your dip. That's where you buy your dip, right here. Let me annotate that. This is one dip. This is second dip where you have another correction, and the slow indicator is sloping down but is breaking up, and fast indicator is moving up. And you have another situation here, but that's another story because you had 1, 2, 3 waves. So basically, you have 2 opportunities to buy the dip. Now, the problem is where exactly you enter, on which day you enter that dip. And the answer is moving average. You put moving average on the slow indicator. You put a moving average on the fast indicator, usually the half of the length of the indicator. If you have CMF 144, you put MA 72. You may use in other proportion, you may use a Fibonacci proportion, you may use 1/3. But look what exactly happens. The trend from the slow indicators breaks up, and at the same time you have the fast indicator about its own moving average. Another instance is right here, another instance right here, and you will have the third one, which is not that usual, but then there is a possibility that indicator is too fast, or both indicators are too fast, and there is higher structure, and you would have to go to the weekly chart to analyze fully that setting. What I want to show here is only the concept of using 2 indicators, slow and fast, and helping with moving average. Furthermore, you can use Bollinger Bands, very narrow Bollinger Bands, so you have some margin of safety, some tolerance to it. You have initial loading, that's Home Depot Daily again. You have initial loading right here. After the consolidation, you have the consolidation here going on. The money inflow is declining, but then picking up again above that Bollinger Band in that case. You have another consolidation and the money picking up, and you have another consolidation picking up. At the same time, you can look at exit under the moving average, under Bollinger Band in that case. You can use 2 moving averages and find its crosses. This is Marvel Daily. You have consolidation going here. The moving average of 47 is crossing moving average of 72. That's moving averages for CMF 144. Then you have fast moving average crossing below. And what follows is a correction right here. Then again, loading again. The crossing moving average is above the checking money flow, stay above 0 line. And what follows, you have another move up. Then the moving averages are crossing below. That's where you exit. It's not exactly the point you short, because both checking money flows are above 0 line. You don't short in those situations, definitely, but you can exit the original position. If you enter, let's say, around 25, you may exit at 45. And you leave something on the table. That's all right, but you've made your money and you can move on to the next opportunity, which arises here. The price is at 55, let's say, and then moving up, and now it's spiking and probably blowing off at 85. That's Gold Daily, and that's an example of not every chart is the same. You have this long base and whole loading is happening here. Then there is declining, but pay attention to the fact that the slow Chaiking Money Flow, it's not going down, it's still staying up, and they are both crossing at the same time. That's very bullish signal. And you don't have the 3 waves up in the Chaiking Money Flow. You see in the price 1, 2, 3, but you can see some spikes in the Chaiking Money Flow. So not in every case the fast money flow will go below the 0 line. it's a different kind of setup. You have another situation here where the checking money flow is well below zero line and slow checking money flow is staying up. But what you have here is declining slow checking money flow, which is a distribution going on. And I will have another video on distribution, because at the distribution point, anything can happen. You can have uptrust, you can have decline, and that's requires a separate analysis. Now, this is the example of selling the rip, entering the short position. Checking money flow, the slow one, is staying below, and you have way up the fast money moving, faster checking money flow. That's the situation when you consider entering short position. Another example right here, and another example right here. In all cases, you have a slow checking money flow below zero line. Also, in this example, you can pay attention to divergences. This divergence right here, right here. But basically, that's where you exit the short position. This is not the situation when you're going long. It is too risky. Those right here are just counter trends. And you short counter trends. If you want to catch the long position over here, over here, over here, it may be not worth, because you never know how this evolves. It's just a reaction. Now, chart of Bitcoin. That's another example how that construction of two checking money flows are helpful, but it does not display, like digital turbine had the perfect chart of rising over from the base and going on. But let's look at it. In 2017, late 2017, the Bitcoin spike and start declining, start distribution over here. Then that happened way too fast, and it's coming back. And you have counter reaction to the trend. Eventually, it's collapsing again. And eventually collapsing again, but it's staying in the range. And look what you have here. You have loading. You have loading. At the end of that range, you have loading. Even it's falling down and coming back. The checking money flow is stay high. Both checking money flows are staying high. In that situation, you can expect that this trend line will be broken, because there is lots of money inflowing onto the breakout line, and it will be most likely successful, and it was. Then you have the first wave right here, and coming back down, and you could load again here. And now the situation is that the slow money flow is staying flat, and fast money flow is just chasing. Most likely it will resolve in another move here, and there will be one more other opportunity later. This is the example of distribution. I will make another video about distribution, because the behavior of checking money flow and price and relation between them can display a various behavior. You have the price basically trading in a range flat, but you can see that slow money flow is falling. That's when the distribution is going on. There are attempts to bounce and break higher, but they are unsuccessful. And you have that situation when both checking money flows are crossing almost at the same time down, and that's danger. Could it change? Yes. At that point, you are pretty comfortable in a short position if you enter on the breakdown. You enter on the breakdown, If that price would come back right here, then it's very positive that the failure was not successful. But as long as it's not crossing back, you stay in short position. When time goes on and you have the situation that Chaiking Money Flow is rising and you have basically double bottom. That's how you identify accumulation. Although this point right here, there is trouble. It can break higher or it could break down. So this is very dangerous point to enter, or this is a gamble to enter. What you have here, or what may be here, initial loading. Then the price will stay in the range. Then when you see that in the future, the slow money flow is staying up and fast money flow is falling, that's where the opportunity to entry long position occurs. You can use that for any time frame. This is NVIDIA 1 hour example. And you have a long period of consolidation, basically flat position. At the end of consolidation, you see that slow money flow is breaking up. The fast money flow is even faster. So you can assume that that's the end of consolidation, and what will follow is a breakout through that line, or if you want to be precise, right here. This is the entry point for that breakout. Just before the breakout happens, you see that it's happening on Chaiking Money Flow. Then you have another situation when there is another consolidation. There is another entry into that consolidation. It's a very small breakout, but it doesn't produce very much. And it's falling down, and it's another entry. Sometimes it takes two times to load into the consolidation or into the base to develop a further movement. This can be treated as one wave, one movement in 3 instances of loading. What will follow, we'll see, but right now there is no time to enter. Now Pfizer. Pfizer, it's a different kind of loading. This is 1 hour also. You have this long consolidation, and between that you have the smaller one. It seems like it's the first initial load here, but there is a correction going on. So the result of that small consolidation, it becomes bigger consolidation. Basically the best situation you have right here. When the slow money flow is up and the fast money are moving just in, that's where you enter, in that situation right here, just before the breakout of this line. And you have another situation right here, very easy. Slow money flow is slightly falling, but the difference between them is so high that the entry is pretty safe. And what follows is you going from, let's say, $43 to $50. And now there was an exit point. There's another bump up, but you wait for another opportunity. And if you treat this as an initial loading, this is the first instance. There will be another one. Then the distribution will happen after that. This is 10-minute chart. Initial loading right here. Initial loading right here, coming out from the base. Then you have small correction, another correction, distribution, and both coming down hard. Both money flow indicators are coming down hard. Then you have the sell opportunity around here. And one more chart. People's Daily. You have two tops hitting right here. Double top. But the situation is a bit confusing. The money flow in the setup of 144 and 432, it doesn't say much. It's basically flat, and you have no idea what's going on. Of course, it will start falling later together with the price. But in that situation, when you don't know what the money flow is showing in that particular setup, you go to the faster setup. That's the remedy. And this is Chaiking Money Flow 144 and 172. And you see divergence. You have two tops, but the money flow is diverging. And the trend line drawn from the money flow 72 days is crossing right here and bouncing back again on that second top. Shortly after that, falling and crossing zero line, and you have confirmation of that breakdown here. Everything is falling. Now let's look to some other charts to discuss more. This is Bank of America daily, and you have that consolidation here. Look, the slow money flow is not that great, but staying above zero line, and fast moving money flow is moving in above the moving average, and you have cross on zero line, and you have a breakout coming right here. I have another video on breakouts. They are the most important thing in technical analysis. There is no other more important concept, and I will post a link to a video below. This is chart of Citigroup. The reason I'm showing you, it's basically the money flow is fairly negative, then start moving in. To better visualize the slow moving money flow, I put some very narrow Keltner channel in blue right here. And it shows me that it's breaking up here. Everything is breaking up here. That's where another break on price is happening. You have, in that position, you have confirmation. You have confirmation that this breakout have legs and will go further up. Cars. Beautiful load. Beautiful squeeze from the consolidation. Now Caterpillar. Pretty same situation over here. Caterpillar is going to new highs, and the money flow is breaking up. It's staying above the moving average. Right now you have situation where you have slow money flow staying up, and fast moving money flow is waiting to cross about moving average. You may just find out soon that Caterpillar will have go higher after finishing this consolidation. ConocoPhillips breaking to new high in October. Slow money flow is above zero line and fast money flow is below. And look what happened right here. The Keltner channel that I put on slow moving for is crossing the zero line. Same here. Then you have Costco. There's some consolidation going on in 2020. The Chaiking Money Flow is highly positive, but you cannot deduct much from it because it doesn't show much. It's just positive. You have to go to the faster moving money flows, and you have breakout right here. It's moving above averages, and it's confirming that break right here. Same situation around here. You have clear trends, breakouts, you have moving above zero line, you have move above moving averages. Now let's look at 10-minute charts, because you can go to any time frame and you can use that technique. Of course, you cannot use as the only indicator, and the price moves above moving average and the money flow is going above zero and creating new high. Then you have one opportunity here, another opportunity here, and maybe here, but you see it's already declining. There is already divergence going on micron. So in that position you have to be careful. Slow money is moving below a support and the price is moving below a moving average. So basically that would be entry short. You have the same situation with Pfizer at the same time as the previous chart. So there is nothing extraordinary. Move about moving average, Chaiking Money Flow is moving in, and right here you enter. You have slow money flow staying up and fast money flow falling and coming back. That's where you enter. You have the price moving back down, but the money flow is staying high. So this is bouncing of that breakout. You have a break here, coming back to that line and bounce again, and it's following very strong. Now it's just falling and won't be that good. 10 minutes on Palantir Technologies. Very bad break. Initially you could enter here and try to ride it. But sometimes you have to take a loss. And of course there is hourly chart and daily chart and plug power 10 minutes. You have initial loading right here, then you have another spike here, another spike here. You could buy somewhere here and here, and then it's crossing below moving averages, is breaking down. So you have to count 1, 2, 3, and that's it. That's what you can get. Then you have to move on and wait for another opportunity. And the last Nasdaq Next Gen 100. You have beautiful loading right here on the 10th. Then you have 1, 2, 3. Then you have 1, 2, 3. And look at this situation. The price is hitting moving average, and the fast money flow is very, very high compared to slow money flow, where it's slightly below zero line, but the difference between fast and slow is so high where you can short with certain confidence. And finally, the last chart, QuantumScape 10 minutes. You may assume that this is an initial loading and there is just first wave, but on 10 minutes you have no idea what happened before. That's why you have to go to 1 hour or daily chart or even a weekly chart to have full picture. In another video I will show the help of Chaiking oscillator. When you have Chaiking oscillator, you can see trends more clearly. You can see where the zero line is crossed. So the conclusion is that yes, the Chaiking Money Flow Tandem is very helpful, but it's not the only indicator you use in analyzing a chart.